I think we're going to have a boom in economic activity. I do think there's been a lot of uncertainty. We now have exposure to the big three, Bitcoin, Ether, and Solana, and we think all three are going to play an important role. Volatility on the upside is a very good thing. So if you think we're in a bull market, MicroStrategy is king of the hill, obviously. The one that moves the fastest, the most aggressively, is probably going to win the lion's share. I think we're in for some very good times. We think we're moving from a rolling recession into a recovery and then into a productivity-driven boom in activity.
As the market gears up for the coming bull run for Bitcoin, we hear from Cathie Wood and her current market outlook and predictions for crypto and Bitcoin in the weeks ahead. As the momentum is building and the institutions are quietly positioning themselves, Wood says everything is about to change. She says the next phase of the crypto cycle is critical, and she's stacking big bets in her portfolio right now. With the next bull market, and with crypto and technology being the biggest investments this year, Cathie Wood says she's remaining bullish on digital assets after increasing her position size during the last bear market. Embracing an unyielding enthusiasm for the crypto realm, Cathie Wood confidently predicts that explosive growth is looming on the horizon. She urges investors to capitalize on the opportunities presented during market downturns as well. Ever since Bitcoin tumbled from its all-time high, the cryptocurrency market has struggled to regain its footing, leaving investors anticipating a substantial bounce back. However, Cathie reassures that a long-expected surge awaits. Let's get right into the latest interview with Cathie Wood, as she gives her market outlook and prediction for the days and weeks ahead.
We're very well exposed to this crypto cycle. We think stablecoins generally, and of course Tether and Circle have 90% of the stablecoin market now. We think that is a very important entree. The holders of stablecoin will have an entree into the DeFi ecosystem, so decentralized financial services that will now take place on public blockchains. So we think that's really the definition of the next generation internet. It's the layer of the internet that was not built early on, because in the late 80s, early 90s, no one expected financial services to take place on the internet. So finally, 30 years later, we're getting the layer of the internet that is going to enable it. We think a lot of good things are happening from a policy backdrop and therefore ultimately a macro backdrop. The deregulation that we're seeing is stunning. It started with crypto and AI. We have a crypto and AI czar now. And I think what many people have not paid enough attention to, mostly because tariffs have been getting all the headlines, given how chaotic they seem. One of the reasons we did not choose to invest in one of the Ether ETFs is, at least as of now, they will not be allowed to stake. And we think staking for yield is a very important part of the Ether Ethereum story. We were having a lot of trouble, therefore, getting access to Ether in our portfolio. So when Bitmine immersion came along, we thought that would be a great opportunity after it sold off significantly following the burst. We did take our position. And same with Soulmate. We have a lesser exposure to Solana, but we have not bought a Bitcoin DAT, so I should be clear there. But Ether, yes. Solana, yes. Staking's a big answer to that question. In terms of the Bitcoin ETFs, I think they are illustrating that, or the Bitcoin treasuries, they are illustrating that at least in the treasury market, for whatever reasons people choose to buy MicroStrategy, maybe it now is offering a yield curve with its debt strategy for Bitcoin. So that's kind of interesting. So, but these are winner take most opportunities. We think that the companies that allocate assets to these new instruments, that the one that moves the fastest, the most aggressively, is probably going to win the lion's share. But MicroStrategy is king of the hill, obviously. You know, one of the most wonderful things about ETFs as a portfolio manager is I don't have to worry about flows. With mutual funds, the portfolio manager has to worry about flows. But the market around us, facilitating ETFs, market makers, authorized participants, it's fantastic. They handle all of the flows.
I see.
They're using all kinds of instruments, and we don't have to worry about it. So, you know, I don't bother about it. But in OB3, so the one big beautiful bill, there was a tax policy measure that we're not sure has been integrated into many forecasts yet, and it has to do with depreciation. If you look at our performance in 2017 and 18, so when interest rate fears were rising and then interest rates rose, our portfolio outperformed in both years significantly, and 2018 was a down year. We were up. So I know that the boom bust around that time period got a lot of people thinking, okay, inversely correlated to interest rate. Historically, that has not been the case. In terms of the Fed, we do think interest rates will continue to come down. But if we're right, in 2026, at some point, it will be clear we're moving into a productivity-driven boom. What does that mean? Productivity is one of the most potent anti-inflationary forces. This is Reaganomics. It's deja vu. And you'll see back then, in the 20 years that ended in the tech and telecom bubble, real growth was very strong. And during those moments in time, inflation came down to surprisingly low levels. And we think that's going to be true next year as well. In fact, we would not be surprised to see inflation well below 2% next year.
Cathie says it's the fastest pace of adoption of any investable asset in all of human history. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all. Cathie has been stressing to investors for months that all the factors are beginning to align right now, a period characterized by parabolic moves upwards in crypto prices.
The surges are solely to get into whatever the IPO is. Now, what happened is Circle, we were a cornerstone investor, $150 million, and you saw what happened to that stock. Saw no such activity around that particular IPO. However, it seemed to give, I'm going to say, market makers and others the idea that, wait a minute, if ARK can get a big allocation to these IPOs, maybe we can benefit by anticipating which ones they will get and choose to participate in. So they've been doing that. We're seeing that. But it does take a bit of guesswork, and we don't participate in every IPO. So I don't think, I think that they'll probably be a little more judicious in doing this going forward, because I think some of this trading has caught them out flat-footed. I do think there's been a lot of uncertainty, geopolitical uncertainty especially. So it seems as though there is a barbell strategy going on here, which is equities to take advantage of lower interest rates and potentially the economic environment that I just mentioned. And then gold, just as a hedge, it seems to me. And the same has been true of crypto assets. They are much more volatile than gold, but they have also done well over time. So I think this really is a barbell strategy. moving from depreciation to full expensing of structures. That has never happened before. Manufacturing structures for the next 3 years. In the first year they go into service, they will be able to expense fully in that year, as well as equipment, domestic R&D, and software. So music to innovation's ears, I would say. That first one, the manufacturing structures, is just for 3 years. The other ones have been made permanent. And so this takes our effective corporate tax rate in the United States, not statutory, that's still at 21, but the effective tax rate for the next 3 years at least is going to be roughly 10%, one of the lowest in the world. So volatility on the upside is a very good thing. So if you think we're in a bull market, you might be very happy with ARKK. If you think, wow, we've had one big move since the tariff turmoil in April, and our strategies have had really good performance, you might want to step back and say, okay, maybe there is something to what's going to happen in the next few years around innovation, given the policy dynamics here in the United States. But gosh, it's done a lot of work already. I think I'll take the lower volatility version. So, we just want to increase access. We believe most people don't own our funds, period. And some don't own them because of volatility. Well, we're taking away one of the reasons, but we think everyone should have exposure to truly disruptive innovation, technologically enabled disruptive innovation, which has a very little overlap with traditional benchmarks like the QQQs.
Cathie Wood points out, with real money now flowing in, she emphasizes that the crypto market has become more significant than ever. Institutional investors are driving the price of cryptocurrency, which will yield massive gains in the next 3 months. Wood believes this will underscore Bitcoin's enduring relevance as an asset and as a hedge against currency devaluation. She anticipates that BTC will continue its parabolic run. Cathie Wood's main focal points this year has also been the movement in crypto legislation in the House, signaling the growing interest in the crypto space. Although crypto legislation might face challenges due to political opposition, Wood advises the company in which she invests to spend heavily now in order to take advantage of huge growth potential. She estimates that ARK's concentration on technology advancement is worth about $7 to $8 trillion, or less than 10% of global equities markets. Emerging markets are relying on digital currency, and Cathie believes that based on the current market outlook, decentralized finance will take over and usurp the roles of most financial services companies. What do you think of Cathie Wood's interview on the current financial market? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.